The topic of this video is how to compete with a cash buyer when you are looking to purchase a home and when you actually need a mortgage to make that purchase happen. So a lot of buyers out there who need mortgages to purchase a home are getting frustrated because every home they bid on, they find out went to another buyer who waived all the contingencies. They've waived the inspections, which unfortunately a lot of people realize, at least in my market, you have to do in order to compete, but they've also waived the mortgage contingency. And the majority of these buyers say, okay, I'm willing to waive the inspections, but I can't waive the mortgage contingency. I can't purchase without a mortgage. What I want to talk about in this video is that just because you need to have a mortgage in order to purchase the home, it doesn't necessarily mean you can't waive the mortgage contingency. I'm sure that sounds a little strange. So let's back up a bit and look at what the mortgage contingency actually states. There are three main things in the mortgage contingency paragraph that protect the buyer and allow the buyer to get the deposit money back if any or all of these are not met. So the first one is just qualifying for the mortgage. Even though people may have a pre-approval, the lender doesn't ask a lot of the nitty-gritty detailed questions until somebody's already under contract. So it's possible that you could have a pre-approval, but then find out later on in the process, once you're under contract, that the lender says, oh, well, I didn't ask about this specific thing, or I didn't realize you'd owned your business fewer than 2 years, or I didn't realize your new job when you move doesn't start for more than 90 days, or some other particular like that. So it's possible you could just not qualify for the mortgage. The second thing is there's an interest rate cap section in the mortgage contingency where your agent will write in, if you'd like, a cap, so that it says if the interest rate that you can get or at the time you can lock in, that if you can't get a rate that is lower than a certain amount, you reserve the right to walk away with the return of your deposit money, so you can protect yourself against interest rates skyrocketing. The third and probably biggest issue in that mortgage contingency paragraph is that depending on how you write things in, it is designed to have what we refer to as a built-in appraisal contingency. And what it means in a nutshell is that if the appraiser comes in, and all of the lenders require an appraisal if you're going to have a mortgage, if the appraisal comes in at all, even $1, lower than the agreed to purchase price that you've offered, the buyer reserves the right to walk away and get the deposit money back if the buyer and seller can't negotiate something that appeals to them mutually. So that mortgage contingency paragraph contains all of those pieces that could potentially mess up a deal. And you may now better understand why sellers are so partial to, quote, cash offers. So here's the important thing to understand. If you need a mortgage and you waive the mortgage contingency paragraph, you are not saying that you're not going to get a mortgage. What you're saying is that in the event you cannot get a mortgage or any of those other things we've discussed, you can get one, but the interest rate's higher than you wanted. Or maybe you do still qualify, but there was a big gap in the appraisal value versus the amount you agreed to pay, and now you're going to have to make up that difference between what the bank will loan you, what you were originally planning on for the down payment, and then any difference. So you need to understand that if you waive the mortgage contingency paragraph altogether, what you're actually saying is that if any of those things doesn't happen and you therefore can't come to closing because you can't get the mortgage or you can't get it in a way that you need to, you forfeit your deposit. So from that perspective, to the seller, you really don't look much different than a cash buyer, because the same thing's true with a cash buyer. If a cash buyer puts a $100,000 deposit down and then decides that they don't want to move anymore, or the job that they were moving for fell apart and now they have to back out, they have no recourse. They forfeit that deposit. So you can, and that's what appeals to a seller. The seller feels safe. The seller knows that when they sign on the dotted line with a quote unquote cash buyer, if that buyer does not close for any reason, the seller can keep the deposit money. Scenario is identical if a buyer is getting a mortgage and needs to get one, but has waived the mortgage contingency, saying if for some reason, even though I'm pre-approved and I'm sure I'm going to qualify, if for some reason something doesn't work out with the mortgage, the seller gets to keep my deposit money. So that's one way that you, as a buyer who does need a mortgage to close the transaction, can compete as far as making your offer look like a cash offer. But obviously, you need to be very clear on what it means, particularly if there's an appraisal issue. You need to talk to your lender and understand your own cash reserves so that if there is an appraisal gap, you understand how you could cover that. So that is just a little note on how, if you are frustrated by continually losing offers to offers that have no mortgage contingency, or they may be referred to as cash offers, one way that maybe you can compete, but there is some risk, and make sure that you understand what it is.